Welcome to another week of our Forex trading school. If you have followed us from the very beginning of the school, from week 1 up to this level, I want to say a very big congratulations to you, because I can assure you that all that we have given in this school is something that would take your trading to the next level. If you don't know anything about trading, and you have followed us from week 1 up to this stage, I can assure you that you can sit comfortably among professional traders and have a very wise discussion on the financial market. We are looking at this class will most likely be the last class in this Forex trading school, but the financial market is so vast that we may not be able to cover everything, but I can assure you that what we have given you is just all that you need. But then the ones that may also be important, we are going to be handling them in our mentorship session. Make sure you don't miss the mentorship session. We'll try as much as possible to put it in a video form. So please go to our Facebook page at Hard Solutions, or follow me on my personal page on Facebook, where you also get to learn a lot and get a lot of updates about Forex trading. All right, so let's get into this week's topic, which is correlation of currency pairs. What is correlation? Correlation is a statistical term. It is a statistical measure of how two variables relate to each other. Correlation is simply a measure that we use to understand the degree of relationship between two variables. In the case of the financial markets, we will say that what correlation is used to predict which pair or security are likely to move in the same direction per time. We have what we call correlation coefficients. Correlation coefficient is the numerical figure that you now use to interpret the correlation that exists between two variables. How do we interpret correlation coefficients? We normally have correlation coefficients of +1, -1, 0, or just in between these numbers. Let me say a range of -1 to 0 and then into +1. So we can have a correlation coefficient of -0.85 or +0.85 or +0.6, and so on and so forth. Now, if you want to calculate correlation coefficient, you need to bring the data of the two variables you are looking at. Let's say I'm trying to find out the degree of relationship that exists between, say, Euro USD and AUD USD, for instance. Okay, what I will do is that I will go to my Excel and impute the data of Euro USD and AUD USD within the same period of time, and then I quickly go and analyze the correlation coefficient. I will ask the computer to calculate it for me. But then there are data, you can easily search on Google and find data of already calculated correlation coefficients of these currency pairs or the pair that you are trading in the financial market. So when we have a positive correlation, maybe you finish calculating your correlation coefficient and you got +0.9 as your answer, it means that what the values of those two currency pairs move in the same direction. When you have a negative correlation coefficient, whenever you get a result of 0, -0.6, -0.3, -0.95, what it means is that the values of the two currency pairs that you analyze the correlation coefficient, that they move in opposite direction. When one is in an uptrend, it's most likely that the other one will be in a downtrend. What if when you have a zero coefficient, that is, there is no relationship at all? It means that what those two currency pairs, that they will most likely move in a random manner. This one can be going up, this can be going down, or they can both move together, or just anything can happen with that currency pair at any time. So what is the essence of understanding correlation coefficients in this industry? There are people that they trade it as their strategy, or they use it as confirmation. If I understand that there is a positive correlation between Euro USD and Euro GBP, for instance, what happens is that whenever Euro GBP is buying, I will also be looking for buy entry in Euro USD. Sometimes some of these currency pairs that have positive relationship, one might move before the other. So you can use the one that have moved to know that, okay, definitely in the other one, we are going to have also a move in the same direction as the previous ones. All right, having established this, let us move over to look at the currency pairs that correlates with each other. Now, this is the table of Euro USD correlation with other pairs. We can look at this 1 month, 3 months, 6 months, 1 year column. One thing you need to understand about data or statistics is that the larger the number of time period, the more accuracy you achieve. If you take the average of 10 people in a big population and you use that 10 to give an estimate of what happens in a big population, you will not have an accurate answer. But when we have a population of 1,000 and you take 900 to do a calculation to now speak about the entire population, you are most likely to have more accurate figure of judgment. The same thing is applicable to correlation of currency pairs. So we're going to be focusing on the data of 1 year, the correlation coefficient calculation for 1 year. So if we look at the relationship that Euro USD has with AUD USD, in 1 year, we will notice that we have 0.93. Now, let me mention that when you have a correlation coefficient of 0.1 up to around 0.4, we will say that what the relationship is weak. The positive relationship is weak, okay? But when we have a greater correlation coefficient of 0.56789, we will say that what the positive correlation is very strong. That means it is most likely that these two pairs will move in the same direction per time. So in 1 year, we'll notice that Euro USD and AUD has a positive relationship, a very strong one. Now let's look at Euro USD. This is Euro USD right here. And then let me click on also monthly time frame of AUD USD. Did you notice this is AUD USD? Now, can you see that they have almost the same chart pattern? You will even think that it is, the same thing. Let me click on Euro USD again. Can you see this? They are moving in the same direction. Now, let's look at Euro USD in comparison to USD JPY. We will see that we have a relationship of minus 0.55. This correlation coefficient shows that Euro USD and USD JPY has a negative correlation. They will most likely move in the opposite direction. Now, this is Euro USD. Let me click on USD JPY, still on monthly time frame. Can you see this? One is in an uptrend, the other one is in what? In a downtrend. They will most likely move in the opposite direction. Now, let's also look at Euro USD in correlation with GBP USD. Okay, this is Euro USD, as we can see. Then let me click on GBP USD. Okay, can you see? The chart pattern is almost the same, if not exact. So when you are trading GBP USD and Euro USD, just know that there is no portfolio diversification. You are doing almost the same thing, because when GBP USD is buying, Euro USD will also be buying. When one is in a downtrend, the other one is also in a downtrend. Okay, so let's also look at AUD USD correlation coefficient with other pairs. Okay, as you can see from the table, AUD USD has a relationship of 0.93 with Euro USD. We have already established it in the other table. Okay, we already established that. Then AUD USD has a negative relationship with USD JPY. Now let's look at AUD USD, this is it. And then let's look at USD JPY. Can you see? They move in opposite direction. All right, let's look at a different pair altogether. Let's look at AUD USD and NZD USD. This is my AUD USD monthly time frame. This is my NZD USD in monthly time frame. We notice that what they have 0.99. That is a strong positive relationship. That means when one is going up, the other one is also going up. There is something we need to understand about why you need the knowledge of correlation in your trading. Negatively correlated currencies that move in the opposite direction are used for hedging purposes. That is managing risk. Most of these hedge funds and big institutions, when they are on buy in one currency, they go to another currency that moves in the opposite direction and also place an order there, so that when one is going bad, the other one is going in a good direction. That is it for correlation coefficient. So it is very, very important that when you are trading Euro USD, for instance, most of the times it is not clear. You can just say, okay, this is Euro USD. Let me go to GBP and see what GBP USD is doing. It helps you to make your decisions. It helps you in your diversification, so that you will not say, I'm diversifying by trading 5 pairs, whereas you are just trading the same pairs that correlate positively. So when you are losing out, you lose out in all of the pairs. So if you must trade 1, 2, 3 pairs, you must trade those pairs that are of positive, negative relationship to one another. So it helps you in your portfolio diversification. On a general note, but not 100% right, we will say that what pairs that has USD at their left-hand side, okay, they will tend to move in the same direction. And pairs that has USD on their right-hand side will tend to move what? In the same direction. This is just on a general note, okay? Because remember what we said, that when you have a pair, the base pair is what you are trading. So just have this mind, is going to help you to determine the direction of currency pairs even without analysis. Or you can just use them for confirmations. So on this note, we have come to the end of our Forex trading school. Every other thing that we're going to do will be under our mentorship section. We can post them here or on our Facebook page. If you are yet to follow our Facebook page, kindly go to Facebook right now and follow us. We're going to be doing even more valuable things in our mentorship section to make sure that you are profitable in this industry. Okay? If you're yet to subscribe, click on that subscribe button, like, comment, ask your questions, and then drop some topics you may want us to handle in the mentorship session. If you have not watched this courses, for at least 2 to 3 times, then you are not doing yourself any good. Go back, reward. The more you watch, the more they become part of you. See you in the mentorship sections.